Okay, stop recording. Don't need to record it. Put this down here. Tineby. The Tinerby? TB? I have no idea how you pronounce that one. Nomad Experience. I see you into stock. Yep, Jay Blue, that's what we're here for. We're going to do some dividend stock investing. Now, just to let you know, some of the comments are being filtered out, so some words you cannot say on here because I blocked them. Certain things I just don't want to look at. Only because I only do dividend stocks, and I would prefer, if you guys want me to take a look at some dividend stocks, make sure they have weekly options available. They at least pay a dividend for at least 20 years or more. This way we can stick to good quality dividend stocks only. We can get the ball rolling. So let's start out with my pad of paper from the stocks we were looking at last night. Hey, John Thomas is here. What is dividend stock? Oh no, Jay Blue. All right, a stock. Basically, I'm sorry you've heard of the stock market. I like regional bank stock, LKFN, headquarters near where Zimmer is located. LKFN, never heard of them. LKFN. All right, I'm going to tell you right off the bat, it doesn't have weekly options, so that's going to be a no. All right. Invite McLorden. All right, McLorden, I have no idea who you are, but Rob Lewis. Okay, this bank here, Lakeland FinBank, whatever it is, it has monthly options available. I don't do monthly options. They just don't pay enough. Lakeland Financial, yeah, I see it. However, they don't pay enough. Jay Blue, I need long term, but don't know where to start. Awesome. All right. Do you do Starbucks? Yes, Bobby. I actually have me some Starbucks. Let's take a look at Starbucks today. Now, Jay Blue. Okay, Jay Blue. If you want something long term, now I do long term stocks, but I trade them on a weekly basis to get a safe, predictable, consistent 1% per week. Jay Hernandez. ¿Qué pasa, amigo? ¿Cómo está? Do you sell dailies? No, I do not. Okay, I buy a good quality dividend stock on Monday. I sell a covered call against it. I collect a premium. That premium is usually 1% or more for a weekly cash flow of 1% or more. That comes to over 50% a year. It's a very simple trading strategy. I'm so tempted to go long on it tomorrow. Gallants! What do you think about GL on Buffett's list? All right, Gallants, GL only has monthly options. You know I don't do monthly options. And Divvy is coming up. Okay, well, Bobby, give me that stock again. Oh, Starbucks. Yeah, let's take a look at Starbucks. SBX. Now, I actually have some Starbucks. Just to let you know, and to be totally honest, I have some Starbucks. I think I got my Starbucks at 88. Okay. I'm interested. Well, Jay Blue, considering you're new here, because I'm really good with names, and I notice people who show up consistently. So you're here new. Okay, great. Now, this trading strategy was created for a 9-year-old back in 88. Sorry, not in 88, sorry. Back in 08. Can you see why K went parabolic today? And signs that would have told you would explode today? Oh, GL, Globe Life has weeklies? All right, we'll write down Globe Life and K. We'll take a look at K also. Are you willing to have an honest dialogue about pitching this as a safe, risk-free strategy? Maddie Babe. Well, sure, Maddie Babe, but let me give you the parameters first, okay? Here's my parameters, why I consider this a risk-free strategy. Number one, never buy something you do not want to hold long-term. Number two, never sell at a loss. Number three, 20 years or more of increased dividends. Basically means if you're paying 20 years or more increased dividends, you're at least a minimum of 25 years old. Yeah, you've heard this, but some people haven't. 4 weekly options available. Now, here's the thing. If you buy a decent stock, yeah, all right, Matty boy. If you buy a decent stock, Home Depot, Lowe's, Walgreens, let me just open up my list so I can rattle some of these off. ConocoPhillips, General Electric, Comcast, Cisco, JP Morgan, Caterpillar, Procter & Gamble, Lowe's, Ford. Companies like that. Companies that have been around for a long period of time. Okay, they're not going anywhere. Yeah, they go up. Yeah, they go down. The risk only comes in when you sell it for less than what you paid for it. If you buy it for a decent stock, never sell it for less than what you paid for it. You're not losing. If they consistently increase their dividends every single year for a minimum of 25 years, selling cash calls cashes out upside given implied to you. Yeah, I get that. I'm not looking for appreciation. I'm looking for that 1% per week. But you've got the downside, which you really talk about. Explain the downside. Okay, let's say hypothetically I buy Ford. All right, now Ford went down to $3 at one point in time. I don't know if you remember that, but it's Ford. They've been in business for over 100 years. They refused the bailout money from the federal government. Say, we don't want your money. What dividend pays the beginning of the week? None that I know of. Cash out small profits and ride long-term losses. Okay, Matty boy, I have no idea what you're talking about. Mikey, how you doing there, Al? Cash out small profits and ride long-term losses. I have no idea what that means. Okay, the longest, I've been doing this for close to 20 years. Close to 20 years. The longest I've ever held anything, okay, was Kimberly Clark. That was last year. I held it for 9 months. Did I lose money on it? No, I didn't. Okay, I very rarely lose money on anything. Every once in a while, I'll take one for the Gipper, so to speak. But I very rarely lose money. If I buy a good quality stock, now that's the main objective. Buy a good quality stock, never sell at a loss. Make sure they increase their dividends consistently. I really don't see Procter & Gamble, Clorox, Caterpillar, AbbVie, Abbott Labs, I don't see any of those companies that are over 100 years old that are going to fold up. Yeah, does it happen? Yeah, it happens. Companies do fold up. Well, there's your risk. Some companies do fold up. Do you know which ones? Nobody does. Okay? Now, there's your risk. If the company goes bankrupt, you have no control over it. But other than that, if you buy the stock and continue to get a dividend that increases every single year, where's the risk? Okay, Roscoe, Dallas, never sell losses. Yeah. Why? Why would I sell at a loss? Seriously. If I buy Starbucks, which I did, I got it at 88. Okay, let me open this up a little bit. Okay. The other day, it was at 88. I bought Starbucks at 88. Now it's down to 74. Am I going to run for the hills and sell it? No, I'm going to keep it. Why? Because I don't buy something to take a loss. Your mantra. Yeah, I get that. Don't cash out your small-term profits. Let winners run. All right, Dallas, I'm going to disagree with you. I'm not looking for capital appreciation. I'm really not. I'm looking for a consistent weekly cash flow. You can't have your cake and eat it too. Okay, you can't say, yeah, I want weekly cash flow, but then again, I also want to have the run up if the stock goes up. It doesn't work that way. It's one or the other. Okay, you either want weekly cash flow or you want capital appreciation. If you want capital appreciation, you're in the wrong place. Okay, and I've told that many times. Close up the calendar. Dividend payout, please. All right, Fong Vo. This right here is live on YouTube. You can go to YouTube and see this live. Roscoe, I think he means you let the losers run and cut your winners short. No, that could be what he means. Granted. But I buy on a Monday morning. Okay, I buy the stock on a Monday morning. I sell a covered call that's going to give me a 1%, and that option is going to expire on Friday. Where the stock is, well, I'll figure that out on Friday. Now, have I carried a stock longer than I wanted to? Yeah, plenty of times. I think I carried 3M this year for 11 weeks. Okay, I finally sold it and I made a profit off of it. Never sell at a loss. What's wrong with that? BizCoach, lost opportunity cost. Okay, BizCoach, you're absolutely right. There is a lost opportunity cost. But here's a question for you. With your open opportunities that you don't want to miss out on, do you consistently get 50% per year or more using less than 10 to 20 minutes per day? You said last night that you carry over 4 or 6 positions last week. That is correct, I did. Where was I? Base coach. Ouch. Okay, 4 to 6 position. Yep. He doesn't share his trades. Actually, I do. Biz coach. Where are they? Right here. Here are all my trades right here. Okay. First week of January. Right there. Okay. Second week of January. Right there. Third week of January. Right there. All the way up to week number 18. Where are we? We're at week 18 right here. Okay. This is account number 1. Okay. Week 18. I think I made 2.6% on this account. What? This account. 2.6% last week. This account right here, not so well. I only did 0.92. Okay, 0.92. That's still pretty good for 1 week. But the averages, look at the averages. Okay, account 1, 27.26 for the year so far. Account 2, 56.85. All the trades are right there. I don't hide anything. Okay, let's go back to where we were. Answer some more questions. Okay, Biz Coach, yes, I did. I shared your trades. You go look at them. Follow good. Biz Coach, ouch. You are in. Yes, I am in Starbucks. I'm in Starbucks at 88. Okay, Starbucks right here at 88. Right now it's down 74. Am I panicking? No. Why? I already collect my premium for this week. Do I care where it's going to be on Friday? Not really. When Friday comes, I'll take a look at it then. The way it looks, the option that I sold against this position, it's going to expire worthless. And then Monday, I will decide what option I want to sell next. As long as I get a consistent 1% per week, I'm okay. Wrong. This is a thrifty mentality of the 90s. And what's wrong with a thrifty mentality of the 90s? If a thrifty mentality of the 90s equals 50% per year returns, what's wrong with that? I'm new here. Do you have options or shares? I do both. Okay, I buy the stocks. I buy the stocks and I sell the options against it. Okay, Biz Coach, again, if you want to have something decent and interesting to say, fine, say it. 98% of all my money is tied up. Great. I make 50% per year or more on my money. Why wouldn't I have my money tied up? Okay? The amount of money that I make selling covered calls on a weekly basis take care of all my bills. So why else do I need money just sitting around? Book small profits, run long-term losses. All right, Maddie babe, I have no idea what you're talking about. All right? Okay. Let's take a look at one account right here. This account right here. 2.6% last week. 1.9 the week before. 1.19 the week before that. 1.2 the week before that. 1.5 the week before that. 1.2, 0.9, 3.9, 4.63. Where do you see me losing money? Where? I haven't lost a single trade at all this year. How does Pfizer look on your point of view? Divided is soon. Dividend is coming up soon. Okay. Bruno, we'll take a look at Pfizer. I'll write it down. Hold on. Is Pfizer on the list? Pfizer's already on the list, dude. Okay, it's right there. We'll take a look at it in a little bit. Maddie, babe, no. I have no idea what you're saying no to. Okay? I showed you the list of my trades. Okay, I have 6 accounts. I share 2 of them publicly. You guys can take a look at all the, the 2 accounts publicly. You do your own math. I buy it. I get more than 1%, and then if it hits my target, I'm out. If it doesn't hit my target, I take it into the next week. Okay, so let's go back here for a second. Okay, week 1, Ford, CVS, General Motors, Macy's. Ford, week 2, Ford, Lowe's, Clorox, General Motors, Macy's. Week 3, Macy's, Ford, Capital One Finance, Clorox, and General Motors. For some strange reason, I didn't label these ones. Week 4, Macy's, General Motors, Ford, Capital One Finance, Clorox, again. Week 5, Ford, General Motors, Macy's, Target. Week 6, Key Bank, Macy's, Emerson Electric, 3M. Yeah, I carried 3M for, I think, 11 weeks, but I finally profited off of it. Okay, all the trades are right there. I don't see what you're having a problem with it. Okay, you don't like the way I trade? Fine. You don't have to be here. But for those of you who do, if it makes sense, here's the gist of it. if it makes sense. Do your own research. What is your target for cash flow? 1% per week, Biz Coach. Okay, 1% per week. Okay, if I have $100,000 in account, 1% is $1,000 a week. If I have $50,000 in my account, then $500 a week. My target is 1% per week. Bobby, oh man, I'm loving Pfizer. Hope it keeps running. Okay, Bobby finally had a good quarter. All right. Can you take a look at PFIE? I have no idea who PFIE is. And I'll write it down. We'll take a look at it. PFIE. PFIE. It's going to be a while because it's at the bottom of the list. All right. Matty Boy, those fundamental, whoops. Where was it? He was about to say something. Bingo, Starbucks, 1% premium, 10% market value loss. Wow. Who am I? My name's James. Thank you for your knowledge. Okay, so anyway, Matty Boy. Starbucks, 1% premium, 10% market value loss. Okay, what's your point? Most people buy a company to hold for years. If I'm buying it intending to hold it for years and I get a weekly cash flow from it, and the weekly cash flow I get from all 5 or 6 positions I have come to over 1% per week, where's the problem? Yeah, Starbucks went down. Who cares? I personally don't care. And I don't know why you don't understand that. Okay, and by the way, just in case you're curious, I made 10% off of my premium on Target. on Starbucks. I didn't do it in this strategy. I did it on my other trading account using a different trading strategy altogether. I made 10% the first week on Starbucks. Yeah, the stock price went down. I'll probably make nothing on it next week. Do I care? No, I don't. I average 1% every single week, safely, predictably, consistently. Okay? I don't know why you have a problem with that. You can tell Thinkorswim to buy the covered call at the money. Yes, you can. Matty Bay. And the thrifts of the 90s went bankrupt. Okay. I have no idea what you mean by that. Yes, you do. I have no idea what you mean by that. 1.5% when? I have no idea. Bobby, SBOX big drops was very rare case of the market drop like that. That's true. Hey, Hollywood's here. How's it going there, LA? At 1.5 when? Blah, blah, blah. Snarko, how's AMC stock? Will it blow? Well, let's write it down and take a look. AMC. I don't think AMC's on the list. I don't think they pay dividends. Hey, buddy, quick question. Right, you ride your losses. Okay, I ride my losses. Yet, my losses still give me 1% or more every week. Why do I care if it goes down? Let's give you a quick little example for this bonehead, because apparently he's having a difficult time with it. All right. Let's say, okay, you ready? Ready, Matty Boy? For your entertainment. Walgreens. Okay, Walgreens. Okay, high of the year was 34. Okay, 34. Slowly drops down. Now we're at 17. 50% loss. Correct? I'm agreeing with you. 50% loss, right? All right. Go over here. Right over here. Go over here. Let's go right to here. WBA Walgreens. Let's go here. Oops. All right, here's all my trades for Walgreens this year. Okay, first one, 22.46. I sold at 22.50 for 35 cents, made more than 1%. Didn't hit my target. Next week, I sold it for 35 cents. Again, more than 1%. Didn't hit my target. Sold it again next week. Didn't hit my target, collected 20 cents. Sold it again, didn't hit my target, collected 12 cents. I doubled down, which means dollar cost average down. I sold it for 17 cents, didn't hit my target. I sold it for 35 cents, didn't hit my target. I sold the next one for 46 cents, didn't hit my target. 27 cents, didn't hit my target. 12 cents, didn't hit my target. 54 cents, didn't hit my target. Oh, then look at this. I jumped in, bought 2,200 more at 20.98. I sold the 21s, 2 cents off, for 83 cents. That's a 4% gain for 1 week. And then I bought another 800 at 17.83. Got 46 cents a share, again over my target. So what is a profit and loss on Walgreens? Walgreens right here. For the year, I am up $5,334 on Walgreens for the year. Way more than 1%, way more than just collecting the dividends. Okay, let's get back to here. Now, you don't like it, you don't agree with it, hey, that's fine. I never buy something I don't want to hold long term. If I buy something and it goes down, I really honestly don't care. And I don't know what you think about me that I actually care what you think. It works. It's been working for me for over 20 years. So if it ain't broke, don't fix it. If you carry 3M, did you make 1% on the covered call every week when it was below your assigned dollar? No, I didn't. Not every single week. But from the time I bought it till the time I sold it, you average it out, yeah, I made 1% on the weeks that I held it. If I held it for 5 weeks, it averaged out to a 5% hold time for however long that was. You like Star Wars? Yeah, why not? Bobby, even if he hits a loss, he gets the dividend minimum. That's correct. Okay, so the reason why I want dividend stocks that continually increase if the stock goes down. Now, 80 to 90% of people who buy stocks buy it to hold for years. Oh, I bought some IBM. When do you plan? I don't plan on selling it. A lot of people don't plan on selling the stocks that they buy. So why can't I buy a good dividend stock like Walgreens, collect the dividend consistently, and collect premiums? If it hits my target, fine. I get out, I buy another one, and then I wait for the dividend to pay again. How's AMC? All right, Snarko, we'll take a look at that in a little bit. Ow! What people may not understand is that the stocks you invest in are sweet stocks for retirees. Yeah, and I don't know who he is. Collecting premiums on these stocks is a bonus. Yes, it is. Snarko, you think AMC will blow bigger than GameStop? Dude, I don't do GameStop, and I don't even think AMC as it pays dividends. All right, Dallas, I'm just trying to make $1 a day. All right, Dallas, I can't help you out with that. Okay, I look at stocks for a weekly cash flow. The dollar a day thing, I don't know what you mean by that. I don't know who you are. I don't know your risk parameters are. I really can't help you out with that. Let's go back. Let's see what we got. Walter. Uh-oh, I missed Walter's stuff. Uh-oh. Hey, Michael Chunko, how you doing? All right, Matty Boy's leaving because it's misleading. Matty Boy, I don't know what you mean. Do you drip? No, I actually spend my money that I make on a weekly basis. When will you send a Zoom link? I send that out first thing in the morning, either tonight. Actually, I'll send it out tonight for whoever's on the morning trading list. Okay, whoever's in the morning trading group, you'll get your link tonight. Or I could do it now. Either way. Because it's misleading. All right, Matty Boy, you're just pig-headed and stubborn. How's that? Polite. Pig-headed? Stubborn. A lot of people are pig-headed and stubborn. Nothing wrong with it. Hey, James. Hey, Michael, how you doing? Dallas, he doesn't drip in this. No, I don't. I spend all of my money that I make. How do you tell Thinkorswim to buy a covered call at the money? Ooh, Roscoe, good one. People, be careful. That's what finally, Matty Boy, something we agree on. People, be careful. Never listen to a random guy on YouTube or TikTok for that matter. Okay, what I say doesn't mean shit. Do your own research. Take a look at Walgreens. Ask yourself. Walgreens is in almost every major city in the United States. Okay, they've been in business for over 100 years. Okay, so they're having a little bit of a slump. Big deal. Every company has a slump. Okay, do you remember when British Petroleum had the leak in the Gulf? Okay, they recovered from it. Remember when Exxon Valdez grounded up in the Northwest? They recovered from that. Okay, Lots of companies have issues where the stock prices go down. As a matter of fact, that's all stocks do. They go up, they go down. They go up, they go down. They go up, they go down. That's all they do. Okay? Unlike Matty Boy, he wants the stocks to come to his house, make his bed, put candy on his pillows at night. Stocks don't do that. They go up, they go down. That's all they do. Here's an idea. Think about this. Let's say hypothetically, right there, or how about right here, 30 bucks. I buy Walgreens at 30 bucks. I buy 1,000 shares at 30 bucks, and they pay 20 cents a share. Okay. Now, if the stock drops down to 17 bucks, how much am I collecting per share? I'm still collecting 20 cents per share. And guess what? Next year, they increase their dividends. So once I buy it, why do I care where the stock goes? Until it goes past my target price, I get out, make my profit, and then I jump into another one. What's wrong with that? And if you do it predictably and consistently, just at the right time. What's the right time? Well, I've always found the right time to buy any stock, okay, is 2 weeks before the dividend date. Why? Because dividend stocks have a tendency to move up just before the dividend's paid out. Each one of these little green dots represents a company and the EX date. What's the EX date? That's the last day the stock trades before they pay out their dividend. So right here, Ford, on the 24th of July, they're going to pay out a dividend. All right? So I want to buy it 2 weeks prior to the 24th, which is the week of the 10th. I'll buy it. I'll sell somebody the option to buy it from me for the exact same price I paid for it. Kind of think of it as a non-refundable deposit. I'll give you an example. Let's say you have a car sitting in your yard, been sitting there for a while collecting dust. Slap a for sale sign on it. Let's say you want $1,000 for it. Okay. Say Matt comes by and he said, "Hey, I'll buy that. Here's a $100 non-refundable deposit. I'll be back by Friday to pick it up." If he comes back to pick it up, he gives you the $1,000. You've already collected the $100 non-refundable deposit, which equals to 1%. Okay. If he buys it on Friday, great. You get your money back. You get your $1,000. So if I buy the stock, let's go here. WBA. If I buy the stock, let's get out of this one because that's tomorrow. Let's not give a squat. WBA, okay, Walgreens. If I buy it tomorrow morning, I can buy it at $17.53. That's the number. I don't make up these numbers. I'm just reading it. Okay, $17.53. The $17.50 strike price, which is a call option that expires 10 May 24. That's next Friday. If I buy it at $17.53, sell somebody the right, not the obligation, the right covered call, I will collect 37 cents a share. That's almost 2%. So here's your question. Do I like Walgreens? Yeah, they're over 100 years old. Yeah, they consistently increase their dividends. Yeah, they're in every major city in the United States. Okay, yeah, the baby boomers and the Gen Xers are getting older, and what do they rely on? They rely on the prescription drugs. Where do you get your prescription drugs? CVS, Walgreens, Walmart, Rite Aid, whatever, some of those companies. Walgreens is right on that list. Okay. Do you take stock on Buffett's list if it don't have dividends? No. I try not to. But Matty Boy's right. Okay, be careful. Make sure you do your research. Or do you only ignore dividend growth? Or do you only ignore dividend growth if it's on his list? I like dividend growth. If the stock goes down, which they all do, okay, I'm not delusional thinking that I'm going to buy a stock and it's going to go up and never go down. They always go down. Okay? Okay, 80% of my trades are cashed out on the same week. 20 to 25% I have to carry into the next week. I have no problem carrying them into next week as long as I consistently get that 1%. LMT, Lockheed Martin. Arnaldo, Lockheed Martin, LMT. We looked at it last night, and last night it was a no. I don't know why we would think it's a yes today. CHTR and Snow, examples of good premiums on these list. All right, now, for fuck's sake, I've never heard of either one of those, which means if I've never heard of them, more than likely they're going to be a no. CHTR. CHTR. All right, I want to look at historical data. Okay, over here it says historical data because I want to see how often they pay their dividends. Okay, and here we go. Get out of that. Historical prices, see that right there? Historical prices. Dividends only. They have no dividends. So why would I invest in a company that has no dividends? Especially when the channel says dividends for weekly cash flow. Okay, so when I ask you people in the audience, when you suggest me to take a look at a stock, make sure it has dividends, because other than that, it's just wasting our time. Okay, CHTR doesn't have dividends, and probably Snow is going to be the exact same way. SNOW. No dividend. Again, why would I want? See, you guys can do whatever you want with your money. Really. And I never tell people what they should or shouldn't do with their money. Is this a Bloomberg terminal? No. Bloomberg terminal? No, it's not. Okay. I only invest in stocks that pay dividends and consistently increase. Why? Well, I'm retired. I want a safe, predictable, consistent income. That's what I want. That's what this channel is dedicated to. I don't look at weird stuff. I don't look at companies that don't pay dividends. I don't look at companies that don't have weekly options. Two criteria and two criteria only, and it cuts the list down to like you wouldn't believe. Okay, on Monday we took a look. 9,503 companies in the stock market that I can choose any single day. 9,503. Two criteria eliminates 95% of them or more. Now, that's just a rough guess. Okay, so if we want an exact number, let's do this. Let's clear that. We'll go 300. I'm going to divide that by 9,503. Okay, 3. So 97%. It cuts it down from 9,503. It cuts it down by 97%. It means only 3% of the stock market actually make my list. Okay, 20 years. Ooh, excuse me. 20 years or more of increased dividends. Okay, 20 years or more of increased dividends, weekly options. Those two criteria right there takes you from 9,503 companies down to less than 300. It's the only thing I want to look at. Other than that, we're just wasting each other's time. Bobby, Walgreens cut dividends. It still qualifies for your list. Sometimes I do, once in a while, make exceptions. It's like anything. You know, almost everything on Warren Buffett's list, I'll take a look at, even though they don't all have weekly options and monthly dividends. But I will take a look at them. Now, Walgreens, I like it. It's been in business for over 100 years. Okay, they were on a list and increased their dividends consistently. Why they decreased it, I don't know. Will I keep it on my list? Most likely because they pay some nice premiums consistently. Okay, some companies don't have decent premiums, but Walgreens does. Sir, what coins is in the market to buy? I have no idea. I don't do cryptocurrency. Uh-oh. I missed out a lot of these questions. All right, there's that one. Is that one? Jim Watson, thoughts on TSQ? I never heard of TSQ. TSQ. Yeah, TSQ is a no. Have monthly option. Why don't I like monthly option? Well, how many months are there in a year? 12. Well, 12, which means I can only collect a check 12 times a year. Why would I do that? If a weekly option pays 52 times a year, 52 checks, okay? Granted, they're not, sometimes you get weeklies that are 1, 2, 3%. Monthlies that are 1, 2, 3%. The numbers still don't work out. And it's very difficult to get an idea of where a stock's going to be in 30 days. It's easier to figure out where it's going to be in 5 days. So TSQ is a no, sorry. FRO. I never even heard of FRO. Frontline PLC. That's a no also. Same scenario. Okay? Now, Um, I could do the exact same pitch. Why would I do something that only has 12 opportunities to collect a check? That's it, monthly options. There's only 12 months in the year. 12 opportunities to collect a check. And then you have monthly cash flow, which is not bad, but I still prefer weekly. So FRO is a no. Ooh. Need to implement the 3-strike rule after 3 bad stocks, then they're out. Yeah, sorry, I don't play it that way. I don't take losses because it kind of defeats the purpose. Why would I buy a stock and then hold it? I mean, then sell it if it goes down. It doesn't make any sense to me. What coins are in the market right now? I have no idea. Okay, we just did FRO. FRO's a no. Did Walgreens lower their dividends from last year? You know what? Let's give it a look. WBA, for those of you guys who don't know, this is Yahoo Finance. I like Yahoo Finance. It gives me a lot of information. Okay, yeah, they did. It was 48 last year. Now it's at 25. Yeah, go all the way down. They've been paying dividends since 1985. Yeah, but consistently increasing. But they just decreased it last year. Why did they decrease? Well, the pandemic screwed up a lot of stuff. We can blame that on whoever we want to blame that on. DTRUY. Are you kidding me? DTRUY. Really? I'm going to have a session one of these days. And it's going to say, WTF, you thinking? Okay. DTRUY. Daimler Truck Holding. It has no option. That's a definite no. Okay, so apparently you guys are not listening. When I say make sure it has dividends and consistently increases their dividends, that's rule number 1. Rule number 2, make sure we have weekly options available. Why? I want weekly cash flow. This doesn't have options at all. So why would I do this one? Okay, Apple. AAPL. Now, I don't have Apple because it wasn't paying enough. Okay, I used to get 4% per week on Apple, but I got rid of it, traded it in for some companies that gave me 8 to 10% per week. Different trading strategy, just, planting a seed for those of you guys who want to upgrade from the monthly to, anyway, let's go. Okay, Apple, interesting. Now, I'm looking at Apple only because it's on Warren Buffett's list. Do you hold Apple? Actually, I don't have any Apple at the moment. They weren't paying enough. Okay, JEPI is a definite no. Sexy Hockey Dad, you're back again. See, I'm good with names. You've been here before, okay? ABR, I have no idea who ABR is. Arbor Realty REIT, 1308. ABR. ABR. Ooh, oh, look at that. They cut their dividend in 08. No dividends in 09, 2010, 2011. Okay. ALB looks excellent. Yeah. Okay. So 2004. Okay, so they've been paying dividends for 20 years. However, okay, no consistency to the upside. But they do pay their dividends. Okay, 35, 43, 47, 55, 57, 65, 70, 72. Then they dropped it to 57, 58, 60, 62, 62, 24. Okay, they dropped it from 62 to 24. Then they dropped it to 8. Then it went 10, 11, 12, 13, 15, 16, 8, 17, 18, 19, 21, 25, 27, 2018, 3 cents dividend. 27, 28, 29. Okay, don't get me wrong. They're paying a nice dividend and they have some consistency to it, but they don't have a consistent continue. Okay. All right, DJ, QYLD, that's going to be a no. QYLD. And they go all the way back to 2014. Okay, so what's wrong with that picture? 2014 is only 10 years of dividends. And do they increase it consistently? 15 is 16, 17, 18, 19, 20, 21, 22, 23, 24. Okay. Okay, so they're not increasing it consistently. Any thoughts on MFP tomorrow? That's a major market mover across all sectors. Impact on Friday's options. NFP. NFP. Hey, they have no dividends. Why? Okay, Matty boy, really? They have no dividends. Why would I look at them? Seriously. Okay, you're trying to interject your thoughts, your ideas, your thinking onto my strategy. My strategy is simple, safe, predictable, and consistent. 1% per week. Okay, never buy something you want to hold long term or you don't understand. I have no idea what NFP is. A is what he means. No farm payrolls. Well, if he said that, then why didn't he say that? Okay, NFP. I'm looking at NFP. It doesn't have any dividends. Why the hell would I look at it? No farm payrolls. Well, alrighty then. He needs to say what he means. ALB is in the money with 3% premium. Cool. T. Seems like it was poor purchase a few years ago. Just declines over time. BTI at all? BTI. BEI. British American Tobacco. Okay. 75, 68, blah, blah, blah. Yeah, the dividends are all over the place, dude. There's no consistency. 86. Well, they have more than 20 years of dividends, but not consistent with their increasing. Okay, so let me just read a couple of numbers. Okay, 86, 3 cents, then down to 2, to 5, down to 4, back up to 5, down to 4, to 6, to 16, to 29, down to 7, down to 6, down to 7, 8, 11, back down to 7, 23, 17, 27, 18, 29, 21, 33, 27, all over the place. Okay, 99, 42, 99, drop down to 8, 31, drop down to 15, 32, drop down to 16, 93, drop to 46, then jump to 109, then down to 52, then 133, then 60, all over the place. No consistency whatsoever. But hey, if you like BMI or BTI, alrighty. Let's go back over to here. Okay, so anyway, ABR. I can't really give you my personal opinion because it's not something I personally would look at. I like to see consistently increased dividends. Okay, you have the dividend kings, the dividend aristocrats, dividend achievers, dividend challengers, dividend contenders. Okay, those 5 lists right there are decent companies that consistently increase every single year. So why would I look at ABR? They don't consistently increase every single year, consistently, predictably. So if the stock goes down, they might cut the dividends because they've done it before. Okay, you have companies that have been in business for over 100 years that don't decrease their dividends. Those are the ones that I like. Alrighty. All right. BTI. Uh-oh. All right, no farms. All right, G. BTI all, yep. You got to flip that screen, man. Can't read it backwards. All right, EM Katarina. This chart right here, this screen is live on YouTube. It much easier because you can't read those numbers. Even if I do change it, watch, here we go. Watch this. Okay, now the screen is correct. Can you read those numbers? No, you can't. But you know what happens here on my end? I have 3 cameras going one direction and 1 camera going the opposite direction. It messes with my mind. So I like to have all the cameras the exact same. That's why they look like this. Matty Boy, because people who know. Alrighty, Matt, if that's what you say, great. The income. Dominic, I know what it means. Realty income. Oh, you mean O. Yeah, O's a no. Why is O a no? Okay, realty income. It's a monthly. What does that mean? It means there's only 12 months in the year. 12 opportunities to pick up a check through option trading. Okay, buy the stock, sell the covered call against it. I can collect 12. That's it. O is a no. I don't do monthlies. They just don't pay the same amount of money. People realize how superficial this is. Well, I would really like people to think it's superficial. I would really like people to go in, look at it themselves. Citigroup. Citigroup is an awesome premium. Okay? If I buy Citigroup at this moment in time, 61.54, and I sell the 61s, I can collect 91 cents a share. That's over 1%. Okay, the 62 is just a little bit under 1%. The numbers either work or they don't. It either makes sense or it doesn't. Rule number 1 always will be never buy something you don't want to own long term. In other words, if you don't understand it, don't buy it. If you don't know what it is, you don't know what they do, don't buy it. It's that simple. Now, Matty Boy likes to think a certain way, and it's perfectly fine. Okay, there's a lot of people out there. They can think any way you want, but you can't make me choose to think the same way you do, especially what I've been doing for the past 20 years. For that, let's go back here for a second. Come over here to my YouTube channel. Okay, go back to my videos, and we'll go to the oldest ones first. Go to this one right here.
Hi, Jake, and me as you being part of my internet website club thingy.
12 different companies and still get only 20% a year. And it's easy. One trade a month. Who can't do 1% a month? But you want to bump it up? Well, let's do 2 trades a month. 20 days. 20 days in the month of January? You can do 2. One every 10 days. Okay, so you get 2 January, 2 February, 2 March, blah, 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 blah. 24 for the whole year. And if you get at least 2%, that's close to 50% a year. 50% per year. That's good.
Now, for people like you, Matty Boy, this video here was 12 years ago. I did it on a whiteboard. Now I have this big screen here, makes it so much easier. But 15, 12, 15, this video is like 12 years old. Okay, but 15, 20 years ago, when my daughter was 9 years old, this is what we taught. Okay, the exact same word. Didn't you hear me say the exact same words then that I'm saying now? Okay, you buy two, 3 different stocks per week. You get close to 50 to 60% per year. If I've been doing it this long, you've never seen it because it's never been available on TikTok before. This video has been up for 12 years. I got a bunch of videos that 10, 15, 20, not 20 years ago. I first learned how to do YouTube videos, I think in 2012, I think. I don't remember. But anyway, you can go back and look at how many videos I have up there. I got plenty. Okay. This one particular with me and my daughter when she was 11. She was 11 here. Okay. Where is she?
As you being part of my internet website club thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that we trade, and every month you'll be getting 4 lists of stocks that you can choose from.
Okay, sounds familiar. The exact same thing we said years ago, we're saying now. Why? Well, because it works. Okay, if it didn't work, why would I be doing it still? ARCC. How about OU? Yeah, that's going to be a no. Do you know ICT? I have no idea what ICT means. ICT. It has no options available. So that's going to be a no. Okay. What the heck is that? OU 812. Can't find that symbol. ARCC. Monthly. Again, monthlies, there's 12 months in a year. That gives me 12 opportunities to collect a check. 12. 12. I personally, just me personally, okay, you guys can do whatever you want. I like weekly. Why? Steve Kenny, how are you doing over there? Coca-Cola. Coca-Cola has terrible premiums. Okay, here's Coca-Cola. $61.99. If I sell the 62s, I'm getting 47 cents. That's less than 1%. So Coca-Cola has always been a no because the premiums are just terrible. Okay, where are we? Yeah, Rob Lewis, it's a spinoff of Altria. All right, Matty Boy, nothing superficial about this at all. It's a simple strategy. Yeah, 86, I'm going to agree with you. Some people want to get complicated and make it more challenging than it needs to be. You know, because people have a tendency to go to college and think I'm right. I didn't go to college, yet it works, and it's been working for me for over 15 years. You don't like it, it's Thursday night. There's plenty of other things on TV you can be watching. Why waste your time here if I'm so incorrect? Low Mahoney, Lockheed Martin, LMT. That's going to be a no. Reason why, gotcha, great content. Thanks, Steve. The reason why LMT is a no for me, it's 460 bucks right over here. I get 460 bucks. Okay, I don't go over 300 bucks. Okay, however much money you think I have, I don't. I can't buy 1,000 shares at 460 bucks. Sorry. Altria, MO. I love Altria. Altria is a dividend king. Been on my list for a while. Okay, 43.98. Okay, check it out. 43.98 was the last trade. The bid, 43.98. The ask, 44. The 44s are going for 37 cents. It just doesn't work. Sorry. And also, take a look at this. Take a look at the chart. Okay, a month ago, up, down. Here's our 30-day bottom. Where's our 30-day top? Today. No, I never buy at a top. Why? Well, because the profit's already been taken. Okay, look, my opportunity to make money has already been taken. Okay, what am I going to do? Ride it back down to the bottom, wait for it to go back up again? No. So no for Altria this week. Okay, I'm thinking another week or two when this comes back down and starts to challenge the 30-day bottom right here. Then it might be a good time to get into Altria. Altria is on my list, but Altria May, and we want to put in okay, not in May, June. All right, Altria has its dividend in June, which is 6 weeks away. Now, I will take a look at this in 3 or 4 weeks because then it's the perfect position. Okay, 2 weeks before the dividend. Okay, the dividend's here. It's a dividend king. They've been in business for over 100 years. They've increased their dividends every single year for more than 5 decades. Now, do you think there's risk? There's risk to everything. There's risk to staying in bed. There's risk to walking out your door. Risk is everywhere. But do you really think Altria is going to fold up shop and just not do work anymore? Well, that's the risk you got to take. Either you think a 100-year-old company is going to continue working, or you don't. Okay, I don't see the risk there. They've been in business for over 100 years. They've increased their dividends every year consecutively for 50 years or more. Okay, I don't think they're going anywhere, but that's me. You guys, you guys have to make up your own decision. You say, wait a minute, should I look at Altria? Well, is he saying right? It doesn't matter what I say. What I say is irrelevant. You guys need to look up and make up your own decisions. I'm just reading what the numbers are. Okay, the 30 days ago, here it was. She goes up, she pulls back. Here's your 30-day bottom. You cannot argue with that. Okay, you can argue all you want, but you're going to be wrong. Your 30-day bottom was on the 15th of April. All right, and from there, it's a nice escalation up to the 30-day high, which argue all you want. It's today. Today is the highest it has been in the last 30 days. Okay, so ask yourself the question. Do you like Altria? Yeah, I love Altria. Should I buy Altria? Not today, not tomorrow. I want to wait for it to go down. How long does it take to go down? Well, from here, she could continue to go up. She could. Or, considering it's a 30-day high, you have all this profit available here. People can start taking, say, wait a second, I'm going to take some profits. So then it slowly drops. When it gets back down to a 30-day low or 30-day bottom, turns around, then I might look at it. 3 weeks is going to be a perfect time to take a look at this thing again. But not this week, not next week. Okay, but I do like Altria. Just not this week. SCS, never heard of them. SCS. Steelcase Inc. Okay, dude, seriously, a monthly. Okay, if you don't know what options are, don't suggest something unless you know. SCS is a monthly optional stock, which means best case scenario, I'm going to collect 12 checks a year. 12. If you're okay with that, great. Me? Nope. I want weeklies. 52 checks a year. 52 is better than 12. Just my opinion. I could be wrong. Matty Boy thinks I'm wrong. Oh, come on, Al. KVU. I'm missing some questions. MAT. Uh-oh, I missed a lot of questions. All right. I'm sorry, guys. I can't get all these questions. Bought calls on Apple 170 and held through earnings. Well, Smelly Bella, you're back again. I've seen you here before. AMAT. Applied Materials. Okay, 197, 200 bucks. Ooh, nice. Ooh, double nice. L. Looks good. Why do I say that? Well, first thing I want to see, where's the high? Where's the low? Where was it a year ago? Where is it now? Okay, that's the first thing I want to look at on a chart. Okay? Now, I want to take a look at the numbers. What can I buy it for tomorrow morning? $199.90. What is the closest strike price to $199.90? Come on. Even elementary school kids will know that one. It's $200. So what is the $200 going for? I could sell the $200 for $3 a share. That's well over 1%. Okay, now for those of you who don't know how to count, okay, $3 is more than 1% of $200. Okay, $200. 1% of $200 is $2. Okay, $3 is more than 1%. Okay, so let's look at the numbers. It's up 11 after hours. Okay, let's check out AMAT. Okay, Applied Materials. Al came up with this one. All right, a year ago, let's slide this out of the way. A year ago, we were at 111.64. All right, finished up the year at 154.86. The last 90 days, okay? Last 90 days, last 3 months, this is what I'm looking at, okay? It's the high, look at that, triple high, 1, 2, 3, okay? 1, 2, 3. The bottom, right here, okay? Where's the high? Where's the low? Where was it a year ago? Where is it now? Now I want to look at patterns. It goes up, pulls back, up, pull back, up, pull back, up, pull back. The pullbacks are a lot shorter than the run-ups. See that? All this run-up, 2 days pullback. Run-up, 1 day pullback. Run-up, a couple days. Run-up, 1 day pullback. Run-up, 2 days pullback. Run-up, 2 days pullback. Run-up, 3 days pullback. Okay, the pullbacks are a lot shorter than the run-ups. You try to look for patterns. Now let's go into the 30 days. Okay, so the last 30 days, what are we looking for specifically? Okay, specifically, 30 days ago, here, okay, pulled back, went up, sideways a little bit. I say channeled a little bit. Okay, 30-day high right here. 5 days later, 30-day bottom. Okay, you can't argue that. 30-day top, 30-day bottom. She runs up for 5-6 days, pulls back 2, 1 day to the upside. 1 day to the upside. I would like to have 2 days to the upside before I think about jumping in. Okay, tomorrow might be a day for the upside. Okay, Monday might be perfect time to jump in. Well, let's see what the numbers look like. Okay, the last trade right here, 197.91. The bid, 198.12. The ask, 199.90. Ooh, so the 200 is going for $3.05. So let's do a little creative math. All right, our profit, $3.05. $3.05. Our purchase price, $199.90. And that equals a grand total of 1.5%. Okay, now, this option here that I'm looking at, that I'm giving you the numbers on, is 10 May 24. That means if I buy it tomorrow morning, if I buy the stock tomorrow morning, sell the option, I'm giving someone else the right, not the obligation, the right to buy it from me anytime between when I sell this option and when it expires. 4 o'clock next Friday. Not tomorrow, next Friday. Okay, is it going to be 200 or higher by next Friday? I don't know. Okay, do I care? Not really. Why? Well, here's the thing. Number one rule, never buy something you do not want to own long term. That means before you decide to buy it, do your research. Do you like Applied Materials? AMT. Okay. Hey, Mark Wellington's watching. Hey, Marky, how you doing? Ask yourself that question. Do I like Applied Materials? Do I want to own it long term? Okay, so let's say hypothetically I do buy it at $199.90, and then Friday comes and it's at 200. Do I want to let it go? Sure, I made my 1%. Actually, I made 1.5%. My main goal is the 1% per week. If it jumps up to $300, do I care? No. Why? I made my 1% per week. Okay? Now, that's my main focus, my main concern. Safe, predictable, consistent 1% per week. I'm not here for capital appreciation. If you want to buy a stock and watch it go to the roof, you're at the wrong place. This is not it. I like boring stocks that basically go sideways and do nothing, no frills. But they do give me 1% per week, and that's what I'm looking for. You don't like it, you don't agree with it, this is the wrong place for you. Okay, I'm retired. I don't want to have to go back to work if I don't have to. Don't get me wrong, I do work because I enjoy working, but I work when I feel like it. If I wake up one day and I don't feel like working, I want to go hang out with my grandson, fine, I will. Do I care about the money I'm losing? No, I get to hang out with my grandson. To me, that's more valuable than however much money I might make. All right, let's go more questions. I can't wait to sell these options tomorrow. I have no idea what you're talking about, dude. All right. Last belly bender. Net Cloudflare beat earnings and still went down. Why? It's rigged. Well, last belly bender. I don't look at earnings. The reason why I don't look at earnings, because I've been doing this for quite a while. I've seen many positive earnings where stocks go down. Okay? I've seen many negative earnings where stocks go up. Who makes the buying decision? Who decides where the price is? The market maker opens it up in the morning. Once the market maker opens it up in the morning, it is you and I, the buyers and the sellers, who decide, oh, wait a second. Applied Materials at 188? That's cheap. Let me buy some. Oh, wait a second. Applied Materials at 214? Oh, hell no, I'm taking my profits. We decide that, nobody else. Okay, so when the stock moves up, great, we take our profits and we move on to the next one. Could it continue to go up? Yeah, it could. Could it go down? Yeah, it could. But you always go back to question 1 and question 2. Do I like Applied Materials? That's number 1. Do I want to own it and hold it for a long period of time? Okay, number 2, never sell at a loss. You're defeating the purpose of investing in the first place. Okay, so again, if you're looking to buy a stock, let's say 197, and you want it to continue to go up, yeah, it's going to continue to go up, but it's going to stop at some point. As soon as we, the investors, saying, no, it's not worth 215. If it was worth 215, it would have already hit 215. Okay? It's going to go from here to wherever it goes. Wherever it goes, I honestly don't care. I just want that 1%. Is it easy to get 1%? Yeah, it is. It's a $200 stock. Okay, could it go up 1%? What's 1% of $200? Okay, it's only $2. That's easy. Okay, but that's just my opinion. Okay, again, do your own research. Do you like Applied Materials? Does it make sense to you? Is this a safe trading strategy for you? These are the questions you need to ask yourself before you do anything. I'm just reading the numbers and giving you my opinion. What's a good one on your list? Ooh, I like Macy's. I like Nordstrom's. I like Wells Fargo. I like Capital One Finance. I like I like a lot of some companies. I have over 150 stocks that I would buy at a drop of a dime if the timing is correct, which means the chart is right and the EX dividend is correct. Okay, here's the EX dividend date for Altria. It is what it is. Okay, I'm going to look at Altria in the first week of June. Okay, that's 4 weeks away. Okay, I'm going to look at Altria 4 weeks from now. Okay, if it's a good time to buy, and if I'm making my 1%, I will buy it. Other than that, nope, I'll see you again in the third quarter. Okay, Altria pays 4 times a year. The first quarter, January, February, March. Second quarter, April, May, June. Third quarter, July, October, November. July, October, September. Fourth quarter, October, November, December. What is the dollar going, when is the dollar going to crash? It may never crash. All right, Denise. Now, the reason I say that is, remember decades ago when they were introducing the euro, okay? All those countries over there said, yep, let's do the euro, let's do the euro. Who said no? England. Why? They wanted to keep their pound. They wanted to keep their pence. They wanted to keep their currency, okay? We honestly think that the U.S. Americans are going to give up their currency? Let me give you a little brief scenario here, okay? Someone explained this to me a while ago. I was like, holy shit, that makes sense. Let's say, hypothetically, okay, we transition to the digital dollar. Every transaction, there's a fee. Okay, so 2 scenarios. Bob has cash. Jim has digital. Okay, Bob takes a $50 bill. He takes that $50 bill to the gas station, gets $50 worth of gas. Is he getting $50 worth of gas? Yes, he is. Is the gas station owner getting $50? Yes, he is. Okay, the gas station attendant, the gas station owner can take it to the farmer, and then gets $50 worth of farm goods. Is he getting $50 worth of farm goods? Yes, he is. Is the farmer collecting $50? Yes, he is. The farmer can pay his farm hands $50. Okay, the farm hands now have a $50 bill. The farm hand collects $50. The farmer got $50 worth of service. So now let's take a look at Jim. Exact same scenario. Jim takes his debit card and he gets $50 worth of gas. Does he get $50 worth of gas? Yes, he does. Does the gas station owner get $50 worth from Jim? No, he does not. He gets $49.75. He takes his money and he goes to buy something from the farmer. Does the farmer get $50? No, he does not. He gets $49.25. So that $50 cash is $50 all the way down the line as it circulates. Now, the $50 digital bullshit, it starts out at $50 for me. But the person I buy it from, it's now discounted. Okay, he takes it and buys something else. It's then further discounted, and then he does buy something else. The same chain of events. By the time it gets down to the farm hands, it's probably down to $47. So who's making out in this digital dollar crap? It ain't us. Okay, I like cash. I will continue using cash because I like it. Except if I go to big corporations, they can bite my butt. You know, I really don't care about them. But for regular people, like yard sales and flea market and stuff like that, cash. Why? Because they're getting a $50 bill, and that $50 bill is $50. It's not $49.75. Okay, there's no fees taking out of cash. All right. That answers my question when the dollar crash, because I, for one, don't want to give up dollar. I don't want to. I don't want to. You can't make me. I'm from that. Oh, Oracle. ORCL. You come across the same question. Do I like Oracle? ORCL. 114 to 115. Nice. Barely makes it. 115, 116. Yeah, Oracle's going to be a no. Okay, quickly. Todd Don, you ready? This is why Oracle's going to be a no. I can buy it tomorrow morning. $115.92. Okay, what is the closest strike price? The closest strike price is going to be 116. What can I sell that 116 for? $1.13. That's not 1%. There are way too many other companies that are offering more than 1%. Why would I do Oracle? I like Oracle, don't get me wrong. It's on my list. Okay, I don't know when. I'm not even going to bother looking because the numbers don't work. I don't even have to look at the chart. The numbers don't work. No sense even going any further. Okay, let's go some more. Smelly Bella. 81. Nope, not ever made money by not risking it. Yep, nobody ever made money by not risking. It's an awesome saying. I've never bought calls. What do I do? All right, Adam, I don't buy calls. Seriously, I don't. Okay, this is one of those few industries where you really have to get the terminology correct. Because if you say the wrong thing to your stockbroker, you could be losing a bunch of money. So, my number one suggestion is educate yourself. Take your time. You're new here. I've never seen that name before. How much your P&L? Oh, Mr. 6'3". Well, I'll show you that in a second. Hold on. I'm talking with Adam. Adam, I buy the stock. That means I own the stock. Then I sell the call for someone to buy it from me at a certain price by a certain date. That is called a covered call, one of the safest strategies there are. But don't believe me, don't listen to me, do your own research. Okay, if you want, come back another day. Yeah, I'm here every night, 9 to 11:30. Watch, listen, absorb, see what you know. Now, Mr. 6'3", my P&L. As of this moment in time, okay, here's all my trades for the year. Okay, week 1, week 2, week 3, week 4, week 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Okay, all of them. Account number 1, 100% cash. I started out with 117,000 at the beginning of the year. Okay, I am up 27.26% for the year in that account. Account number 2, 100,000 cash, 100,000 margin. Big difference. Okay, I do not suggest anyone do a margin account until you understand the risks involved. Okay, don't do it until you understand, right? Because you can lose a shit ton of money if you're wrong. Now, account number 2 is up 56.85% since the beginning of the year. Here are all the trades. You don't believe me? Go through them yourself. Do your own accounting. Okay, here, hold on a second. Profit and loss year to date. Here we go. Whoops. This particular account. Whoops, right there. Down on 3. I've only lost on 3, but I didn't lose yet because I still have them. I have no intention whatsoever in selling at a loss. Every single trade I've done so far this year, okay, and it's a 22,000 in the positive. You add the market loss back into it. I'm still up over 25% in this particular account. Now, I only share 2 accounts with you people. I have 6. I only share 2. All right. Now, I just showed you what the numbers were for this year. Believe it, don't believe it, totally up to you. Don't really care if you do or not. I can't believe this guy doesn't love Apple. Well, here's the thing about Apple. Well, I did have Apple a while ago. Now, it was only giving me a 4% return per week with the strategy that I was doing. But all the other accounts, all the other stocks in that particular account were giving me anywhere between 8 to 20% per week. Total different strategy. Okay, but Apple was only giving me 4%. So yeah, of course I wanted to get rid of it. So I bought some Starbucks this week. I got 10% on that one this week. Granted, next week I probably won't make 10%, but it is what it is. Is Amazon a hold? Amazon's not even on my list, dude. Amazon does not pay dividends. What does that mean? Okay, it means you have 2 opportunities when you buy a stock. Either the company's going to share their profits or they're not going to share their profits. It is totally up to you what you want to do. If you want a company that's going to go from here up to here, you're in the wrong place. This ain't it. Okay, this is slow, methodical, even boring. Okay, I look for a 1% per week. Oracle's at 115.92. All right, I'll get it at I'll get out at 116.50. Grab my 1% and leave. Thank you very much. That's all I want. It's easy to get 1% per week. if you do it systematically. All right, let's go to some more questions. Yeah, but Amazon's not on my list. True, but it's a great way to go broke. Yep, good. Net, N-E-T, I never heard of them. N-E-T. Nope, N-E-T. Cloudflare, never heard of them. Well, let's go to Yahoo Finance. Huh. And look up N-E-T. Okay, here's N-E-T. Well, I'll go to historical prices because I want to see how often they increase their dividends. Dividends only. Oh, look at that. Why would I buy a company that doesn't share their profits? Amazon is not a buy for me. If you want to buy Amazon, that's totally up to you. I don't tell anyone what to buy, what not to buy. I don't. You're a big boy, you're a big girl, make up your own decisions, figure out what I'm telling you. Is what I'm telling you true? Okay? Does NET pay dividends? No, it doesn't. So if it doesn't pay dividends, I'm not even going to bother wasting my time looking at it because I have plenty of companies that do pay dividends. Okay, so if the stock goes down, I'm getting dividends higher and higher and higher every year. Okay, if Amazon goes down, you're not getting anything. Amazon does not pay dividends. Okay, I don't care if the stock goes from here to the moon. I don't. Okay, AMZ, whoops, ZN. Okay, okay, so a year ago, Amazon was at 100. Now it's at 184. Okay, big deal. AMZN. We'll go over to Yahoo chart. Loading chart for Amazon. Okay, it's loading. Hold on a second. How do I make this damn thing bigger? Here we go. Interactive chart. Well, I went to 5 years. Oh, let's take a look at this for a second. Now, we can all see this, right? Amazon in 2020 was down around 90 bucks. Okay, 2021, she's up at 180. 2023, she's back down to 80. Okay, now she's at 184. What does that tell you? Well, it tells you stocks go up, stocks come down. Stocks go up, stocks come down. That's all they do. Where are you going to get your profit? They don't share profits. Okay? They make all this money and they don't share it. Why would I buy it? Why would you buy it? Personally, you want to buy Amazon, hey, more power to you. I don't buy it because it doesn't share in the profits. It just doesn't make any sense to me. But that's me. What do I know? Well, look at that. Okay, way back here, it was $2.90. Okay? 5, 10, 15, 20. 20 years. No, I don't have 20 years to wait. Okay, I want weekly cash flow. So you're going to carry it for 20 years and nothing on a weekly basis. Nothing on a monthly basis. Yeah, no thanks. Really don't care. Even if you guarantee me I was going to do that. No, I still prefer 1% per week. Systematically, predictably, consistently. All right, let's look at some more questions. Paramount is up 13%. Well, I actually have Paramount, don't I? Yes, I do. I have Paramount right there. Okay, I'm into Paramount at 12.52. And it's at 13.86. Well, looks like I'll be out of Paramount this week. Let's go back to this one. This one has all the good stocks in it. So Paramount ran today, and I will get called tomorrow. And I know to get back on Monday. Okay, LRock, I can't answer that one for you. But let's take a look at the chart. P-A-R. Okay. Last 90 days. Here we go. 90 days ago, way up here. Here's your 90-day bottom. Your high, your low. Where was it? Where is it? That's your 90-day. Look at the movements. Down, up, down, up, down, up, down. Yeah. Look for consistency. Now let's look at the last 30 days. All right. 30 days ago, previous 30-day high, 30-day bottom. Went up, pulled back, up, pulled back, up. Here's your new 30-day high. You want to stand on a ladder waiting for another taller ladder? That's up to you. I'd take my profits and say thank you very much. But that's me. Okay? And I would not jump back in this on Monday because I wait for that profit to be taken, and sometime not next week, but probably the week after, it might look good again. 86. If you're careless, yes, 2% of my portfolio is dedicated to long options. Okay. Apple. Yep. Oh, let's go back to Apple. Apparently somebody likes Apple. AAEL. I want you. How do I get out of here? I don't want to look at this anymore. How do I get out of this damn thing? Here we go. AAEL. Dividend. I'm going to see how many dividends Apple is paying out. Okay, 2012. 2012 is when Apple first started paying out dividends. So what is that, 12 years? Okay, if you're okay with 12 years of dividends, fine. But it's a 9 to 11 to 12, 13, 14, 16, 18, 19, 21, 22, 23, 24. Okay, great. But it's only 12 years worth. And the only reason I look at Apple because it's on Warren Buffett's list. So let's take a look at Apple. All right, first thing I want to look at is the numbers. Let's move this over here a little bit. Okay, 183.50. That's what I can buy it for tomorrow morning. The 182.50, yeah, that's going to be a no. Because the numbers just don't work. Sorry. Okay, 183.50. Okay, you have the 182.50 or the 185. The 185 is paying 69 cents. No. Okay, the 182.50 is paying $1.06, but I'd be losing $1 right off the top. No, the numbers just don't work. Okay, don't get me wrong, Apple's great. You know what's really good about Apple? Take a look at the seasonality. What does Apple normally do every year? Okay, the blue line represents this year movement. The red line, look at this, January 1st to December 31st. That's almost a nice straight line to the upside. Okay, no big jumps, no big drops. Almost nice. Look at that. Really, I love the movement. However, the numbers are horrible. Okay, take a look at the numbers. It just doesn't work. Why would I buy Apple and not get 1% when there's so many other companies that do give 1% or more? All right, so it's no to Apple for me for this week. Now, Apple sometimes gives great premiums, but not this week. All right, so what else we got here? Chipotle stock is so expensive. Yeah, then don't buy it. James, please check AGNC. AGNC. Ooh, interesting. Ugh, those premiums are horrible. Okay, AGNC's a no. Here's the reason why. You ready? I can buy it at $19.34. Sorry, $9.34. Okay, great. What's the 9 going for? 21 cents. No, you're losing money. What's the 9.50 going for? 3 cents. No, it's not worth it. That's just my opinion. That's my opinion for me. You guys need to make up your own opinion. Does it make sense to you? It doesn't make sense to me. Can you look at TX? I got into them today. Not sure I understand the dates for dividends. Oh, TX. I've never heard of TX. My question would be why? Why did you buy TX? That's my question. It's a monthly. Okay, the options that are available are monthly. What does that mean? That means the best you're going to be able to do is collect 12 checks a year if you're gonna do covered call trading. Okay, where you buy the stock, you sell somebody the rights to buy it from you, and you collect a premium. Yeah, all that kind of nice, neat, fun stuff. 12. That's all you're going to be able to do. That's why I don't do monthly stocks. I don't. Love to Hike is here. This is Mac. Can you teach me how to do that regarding stocks? You need to be a little bit more specific, Mac, on what kind of questions. ESP. Oh, EPS, earnings per share. Yeah, I don't even bother with that, to be totally honest with you. Okay, do I care about the earnings per share? No. What I care about is, do they consistently increase their dividends? If they don't consistently increase their dividends, why would I want to look at them? Okay. Thanks, Al. Thanks, Dave. EPS. Wisdom tree. Yeah. Sorry, that's going to be a no. I had to plug my phone in because the battery's getting low. Uh-oh. Hold a second, guys. There we go. Don't allow. Don't allow. Don't allow. All right. Yeah, sorry. I don't do monthlies because there's only 12 months in the year, which means I can only collect 12 checks, one per month. Doesn't work for me. CVS. I like CVS. CVS is on my list. Okay, now 55.25. The 55s are going for 86. Take 25 cents off of that, then you're looking at over 1%. Okay, so CVS is over 1%. But here's the thing. Let's take a look at the charts. Okay, the high right here, the low right here. Where was it a year ago? Where is it today? All right, so CVS had a big drop. Why? This is the question you got to answer before you go any further. Okay, because look at it. The last 30 days right here. Here's the last 30 days. Here's your 30-day top. 6 days in a row. That's like a what do they call it? A six top? Yeah, it's a six top right there. The 30-day bottom was today. Why? Why this big drop here? That's a question you need to answer before you think about buying CVS. Why did it drop? Now, CVS, again, it's one of those drug companies. It passes out free drugs, not free drugs, but, the last legal drug. But give you an opportunity, to, it's a good quality company. It's been around for years, okay? And they've increased their dividend consistently. Okay, so the question is, why did it drop? Do I want to own it long term? Okay, that being said, what does it stock normally do this time of year? Normally, CVS basically just goes sideways for this time of year. Okay, beginning of May to the middle of May, basically just sideways. Okay, so why did it drop? That's a good question. Let's slide over here and take a look at those numbers. Okay, so tomorrow I can buy it at 55.25. Okay, the 55 is going for 86 cents. Okay, with 86 cents, clear that. 86 cents, I'm going to subtract the 25 because we're losing 25 right off the top. Okay, subtract the 25 cents. And that gives a grand total of 61 cents is going to be my profit. If I'm buying at 55.25, I'm selling the right, someone to buy it from me at 55, and I'm collecting 86 cents. I'm only walking away with 61 cents per share. Okay, now I want to divide this by the purchase price, 55. Why 55 and not 55.25? Well, I've already subtracted the 25 that I'm losing, so I don't need to subtract it again. That's 1.1%. But here's the question. Do I like CVS? Well, yes, I do. Do I want to buy it now and hold on to it? Because it's at a 30-day bottom right now. That could be the bottom. Me, personally, I'd wait a couple of days for it to turn around and go back up. Because it is going to turn around and go back up. I mean, they've been in business for over 100 years. Okay. I don't do monthly options. That's right. Costco. How did I miss all these questions? There we go. Okay. Costco's a no. It's too pricey. Comcast is a yes. Let's take a look at Comcast. CMCSA. CMCSA. 36, 36. 30s. Is that right? Oh, 38. 38. Okay, 38, 34, 38, 50. Cool. It does. Okay, look at the number. Okay, Comcast. Love Comcast. You know what I like best about Comcast? Last time I checked, Comcast had 65 million subscribers, giving them a check every single month. Can you believe that? 65 million customers. All right. I can buy it tomorrow morning, $38.34. The closest strike price, $38.50. And I can collect 43 cents. 43 cents is more than 1%. All right. So here's the question. Do I like Comcast? I love it. I buy Comcast every quarter. As a matter of fact, right here, week number 6, or week number 12, week number 11. All right, week number 11, Comcast, right there, 1,900 shares at $43.45. I sold the 43.50s for 53 cents, more than 1%. Love Comcast. Okay, when else did I get it? Week number 3. Comcast. Oh, I already had Comcast. Hold on. Week number 1. So I had week 1, 2, and 3. So I got premium dividend. Cool beans. Oh, look at this. CVS. Right there. Week number 1. Okay, bought it at $79.43. Sold off to $79. Got $1. Cool beans. Comcast. I bought it at $48.85. $43.85. Sold the 44s. Got 32 cents. Not quite 1%. But if it hit my target, I collected another 15 cents. Now I'm over 1%. Okay, Comcast again. I sold the 43s for 26. Didn't get 1% quite there. Again, week 3, I got the dividend. Okay, so Comcast, I sold it at 23 and collected the dividend. Okay, so anyway, that's how it goes. Let's go back to right there. Okay, so I like Comcast. Now, a year ago, Comcast is at 41. Okay, what I want to see, I see the high, the low. Where was it a year ago? Where is it today? That's the first thing I want to see. Okay, I don't want to buy it at the high of the year because it. Okay, at the bottom of the year, I like bottom of the year. Why? Because it only has one way to go. Once it turns around, it goes up. Okay. A year ago, we were at 41.33. We topped out the year at 47.46, and that was mid-August. Finished out the year last year at 43.50. The last 90 days. 90 days ago. Right, 90 days ago, the high, the low, where was it? Where is it? Okay. 90 days ago, we high of 45.82. Drops down, channels sideways for a little bit, drops down again. Now we have our new 30-day bottom. Let's go the last 30 days. Check it out, the last 30 days. Where the high, the low, where was it? Where is it? Okay, so the 30-day high, she comes down. Here's your previous 30-day bottom. Okay, previous 30-day bottom. She goes up for 4 days. Okay, it's not a 30-day high, but we, the buyers and sellers, decide, wait, what's going on? Too high. Let's take some profits. They took some profits all the way down to the new 30-day bottom. Okay, now she's going back up to the upside. How long before she starts challenging those prices up there? It's a good time to jump in. But before I do that, what does it normally do this time of year? Okay, this time of year, here we go. Okay, here we are here. Okay, for the next week, Friday's there, next Friday's here, the next Friday there, the next Friday there. Okay, so for this week, she's going to end up here tomorrow, roughly. Okay, then in a week, she's going to end up there. 2 weeks, she's going to be there. 3 weeks, she's going to be up here. In 4 weeks, right about here. That is based on historical performance. Is that guaranteed? No, it's not guaranteed at all. That's just 10-year average movement. Okay, now what does Comcast do? They don't really do anything. They offer digital service, digital content. They're not inventing anything new, but they do have 65 million subscribers. So I like it at 38, 36. But before I do that, CMCSA. May. Not in May. Not in June. July. First week of July. That's when they have their dividend. So what am I going to look at it? I'm going to look at it the second to last week of June. So that's like 4 weeks away, 5 weeks away. Okay. Until then, I don't really want to look at it because it's not a contender for me at this moment in time. I want to be reassured because stocks have a tendency to move up before the EX date. Okay. After they pay out their dividend, they have a tendency to go down. So why would I want to get it after its dividend date? I want to get it before the dividend date because that's all stocks do. Okay. Okay, look at it. Comes down, goes up. Comes down, goes up. Comes down, goes up. Down, up. Down, up. Down, up. Down, up. Down, up. Do you see it doing anything else? It goes up, it goes down. Okay, so if you get it before the dividend date, it's going to go up. Not guaranteed, but for the most part, most of the time, most stocks go up before the dividend date. Okay, at that time is when I want to look at it. I want to make sure the charts look good. Okay, I want to make sure I'm buying it at the right time. Okay, why? How do I do that? Well, I look at the calendar. Okay, I have like 5 or 6 different lists. Let me read them off to you so you understand. Okay, list number 1 is stocks that are over 100 years old. Number 2, dividend aristocrats, 25 years of increased dividends. Number 3, dividend champions, again, 25 years or more of increased dividends. Okay, underneath that, the dividend contenders, 300 companies that have increased their dividends every year for between 10 years and 24 years. Not quite a dividend champion, not quite a dividend aristocrat. Next, the dividend kings. 5 decades. That's 50 years of increased dividends. These are the lists I look at. I will go through each and every one of these lists over here, which my watch list. Okay, I open up my watch list. Get rid of this. Get right there. Okay, and I will take a look at each and every individual stock. Whoops. All right, where is it? Company news. Right here. Here we go. Company news. Right there. I will look at company news. Where is it? Nope. It's here somewhere. Here we go. Okay, and then I'll just look at the company news. All right, and then when I look at the company news, I see, is there any reason for me to take that stock off my list? Okay, if there's no reason for me to take it off the list, fine, it stays on. But I'll do that once a year. Okay, is it a good company? Do I plan on holding it? Do I plan on keeping it? What's going on? Okay, every single stock, very first thing I want to see, when are they paying out their dividends? I want to take a look 2 weeks before. Okay, here's Lowe's right here on the 25th. I want to look at it the week of the 10th. That's 2 weeks before it. I actually have Lowe's at this moment, and I've had Lowe's for the last 3 weeks. Okay, so I caught it a premium the first week, premium the second week, a premium the third week, a dividend the third week, and I still have it. Do I mind holding it? Do I mind that it's going down? No, I don't mind at all. It's Lowe's. They've been in business for over 100 years. They've increased their dividends consecutively for 50 years or more. It's never a question, should I buy Lowe's or shouldn't I? Well, yes, I want to buy it, but my deciding factor are the numbers. Okay, is it a good time to buy? Okay, do the numbers work? LOW. Okay, 229, 230s, oops, are going for 387. Okay, all right, to 230s. Okay, so I could buy it at 229.98. The 230s are going for 287. That's more than 1%. Do I care about the dividend? No, I care about the 1%. If I get 1% every single week, that's over 50% per year. That's my goal. That's my focus. That's what I want. Safe, consistent, predictable. Have you never heard of Lowe's? Almost everybody's heard of Lowe's. They've been in business for over 100 years. It's the blue store, not the orange store. The orange store is on the list too. Home Depot, another dividend king, another company that's over 100 years old, another company that have increased their dividends for more than 5 decades. Why wouldn't I? I don't want to buy it and hold it. Look, I buy it and hold it. Look, it goes down. I don't want that. I want to buy it, have it go up a tiny bit, jump out, get my 1%. Now I'm back into cash. What can I do next week? Well, here we go. Next week, this side, Caterpillar, Wells Fargo, Bank Mellon, Pfizer, Kinder Morgan. All these companies, I never have to decide, do I like the company? No, it doesn't even register in my mind. Okay, seriously, it doesn't. Once you decide, oh, I love Comcast, okay, it's on the list. I will look at it 4 times. First quarter, second quarter, third quarter, fourth quarter. That's it. Only time I look at it. And 2 weeks before the EX date. If the numbers work and if the charts look good, I'll buy it. If not, next. I have too many companies to go through to not have something to buy. Now this week, I brought 3 companies over from last week because I didn't hit my target last week. So I brought them over this week. I only picked up 2 companies this week. 2. What 2 were they? That was Walgreens and Marathon. Okay. Both of them gave me well over 2%. Okay, so I didn't hit my target this week. This week I made 0.97. Oh, wow. I was $30 off. $30 off of hitting my target. Okay, so 4 times this year, I didn't hit 1% in one of my accounts. I'm still up over 1% on each account. All right, that's Lowe's. Let's look at some more questions. Verizon. Futures, for your information, futures up nice tonight and hopefully stay. I have no idea what that means. Verizon, VZ. VZ. Verizon, we all know who Verizon is. 38.92, the 39th, 40 cents. There you go. However, Verizon's a no. Why is Verizon a no? Here you go. 30-day high, 30-day low, bouncing off that bottom right here. 3 days to the downside. Never fight a trend. The trend is to the downside. Okay? Nice opportunity to get in once it finds its bottom and turns around at least 2 days. And then I want to find out when Verizon has its dividend date. 7th of July. We're in May. So we got all of May, all of June. I won't look at Verizon until the second to last week of June. So there's no point in looking at it today. That's just my humble opinion. How to choose the dividend stocks. I think we just went over that. ED. Oh, nobody's ever brought up ED. ED is Consolidated Edison. They've been in business for over 200 years. Can you imagine that? 200 years, Consolidated Edison. But I'm pretty sure Consolidated Edison owns a monthly. Yeah, monthly. Sorry, dude. Great company. It's been in business for over 200 years, but it's a no. Hey, Brian Spence, you're back. Hope you have nice things to say tonight. You boomers, free liquidity. I have no idea what that means. CMCSA, we already went over Comcast. Can you do Intel? We already did Intel. But I'll do it again, INTC. Because I actually have some Intel. Okay, at this moment in time, Intel is at $30.58. The 3050s are going for 50 cents. That's well over 1% if you wanted to buy it now. But if you bought it and have it, depends on when you bought it. When did I buy Intel? Not there. Intel, right there. I bought it on the 29th. Okay, at 31.25, and I sold the 31s, got 66 cents. That's over 2%. Okay. Okay, Intel. What did I get it at? 31. Yeah, I got it at 31. So it's at 30.50 at the moment. It looks as if those options are going to expire worthless. So what does that mean? See, I bought it at 31. Okay. I have no problem with my position because I bought it after it dropped. Why? I know who Intel is. I know what kind of company it is. It's going down. Yeah. Do I care? No, I don't. Intel keeps increasing their dividends. What did I make on it? I made over 2% this week. Do I care it's at 30.51? No, I don't. What does next week's look like? Next week's Intel, okay, at 31.50 is going for 17 cents. Okay, so I'm not going to make my 1% next week. Do I care? No, I made over 2% this week. So between this week's 2%, next week's 0.75%, so I'm up 2 3/4% for 2 weeks. It still averages out to 1%. All right, dude, I already checked out EPS. EPS is a no. And I just did Intel. We already did CVS. We already did Starbucks. Uh-oh. Do you sell all your stocks on Friday if you're up? No. All right, blank, we already did CVS. Do you buy stocks and options at the same time or 2 separate transactions? All right, Dorino, is that right? Dorino? I don't buy options. Okay, I sell options. I buy the stock, I sell the option, and I do it all at one time. Now, if you can see this screen right here, okay, I'm going to show you how I do it. It's relatively simple, okay? Now, I use Thinkorswim because it's easy to use. Now, I've been using it for over 20 years, or close to 20 years. I want to come over here to where it says the spread, right? The option chain, this is the option chain, tells you all the options. Okay, the filter, I don't even use that. Spread, right over here. I click on that, and a window drops down. Okay, I want to come down here and do the covered stock. Okay, I click on covered stock. Okay, I like it at $30.50. Okay, I like it at $30.50. Here it is right here. $30.50. I come over to here. I want to buy it at $30.50 right there. Okay, now go to $30.50 right here we go. And I can buy it at $30.08 a share. That's what I'm paying for the stock. Okay, look what happens. I click on that and you have a double entry. The first one, it says covered. Next one, it says sell, buy. Okay? 10 contracts, 1,000 shares. INTC, 10 May 24th. That's this Friday coming up. Now I come over here. Here's the price, $30.04. Okay, limit order for the day. Now I'm going to hit confirm and send. When I hit confirm and send, you're doing 2 trades at once. Okay, and then this window pops up. This is my confirmation order before I sell it or buy it, whatever. Okay, and here's the description. Buy 10 covered INTC, Intel 100s. Those are the weeklies. Okay, 10 May 24. That's next Friday. $30.50. Call Intel. So I'm selling the call. I'm buying the stock. 2 open, 2 open, because I'm doing 2 orders. I'm selling 10 contracts to open. I'm buying 1,000 shares to open. Now, down here, it gives me my profit and loss. You ready? Maximum profit, $460. So let's get the calculator. $460. That's my profit. What is it costing me? Well, cost of trade including commission, $30,046. Divide that by $30,046, and that'll give me a rate of return of 1.5% for Intel. Okay, so here's a question you need to ask yourself. Let's get out of that. Let's get out of that. Let's get out of that. Do I like Intel? I do. Do you mind owning Intel at $30.51? I have no problem with it whatsoever. Why? Well, it's Intel. Okay, it's been around for decades, consistently increasing their dividends. Okay, yeah, they're in a little bit of a slump now. Okay, but today was an up day. Even though it's red, it was still up. Yesterday was the 30-day bottom. Okay, so today's an up day. If tomorrow's another up day, perfect time to jump in. 2 days to the upside. Is that guaranteed? No, it's not. But is it a high probability? Yeah, it is. Because you can only have one 30-day high, and you can only have one 30-day low. Is yesterday the 30-day low? Don't know. Tomorrow, whatever it opens up at tomorrow, whether it's higher or lower, will give us a good indication whether yesterday was the 30-day bottom. But you still have to ask yourself the same question. Do I like Intel? Do I want to own Intel? And do I want to own Intel at $30.51? There's the conundrum. You have to do your own research. You have to ask, is that what I want to do? Okay? To me, it's never a question. If it's on my list, it's a hell yeah. It's just, is it the right time? Okay? See, here's my 100-year-old companies. I like those. Okay, so let's see what other questions we have. All righty. At the same time, lock in the price. Yep. Buddy Wally, hey, I haven't seen you in a couple of days, dude. How you doing? If one of your stock drops, do you lower your next call strike? And how do you determine that? Well, the way I determine that, let's get rid of this. Let's go and actually take a look at, where is my position? Able model. Well, let's look at Bit, no, not Bitto. Let's look at Lowe's. Okay, see Lowe's, I'm into Lowe's at 238. The 8th. Okay, now, low battery. I'm into Lowe's at 238. 238 is right around here on the 8th. So let's get a close look into that. All right. Here's the 30-day high. Okay. Here was my signal to jump in. Here was the previous 30-day bottom right there. Okay. One day to the upside. That was a Friday. Thursday was the 30-day bottom. Friday's here. Here's Monday. Monday's an up day. 2 days to the upside. Great. I jumped in. It went up one more time. I sold and collected a nice premium on that day. What happened then? Look, it started to drop. Okay. Now I'm still into lows at 238. I sold the option. What option did I sell this week? I sold the 237s, which is way up here. I didn't collect 1%, but I did collect the dividend. I got premium, premium, premium dividend so far, and I still own it. However, it is at 239. Now, what does the options look like for next week? Because I really don't see it going up over 237 in the next day. Could it? Yeah, it could. Will it? Probably not. Okay, 237 is right here. Okay, it doesn't look like much. Let's go in a little bit closer. Whoops, that's too close. Okay. So here's 237 right there. See where that line is? 237. Here's where we are right now, 229. Could it hit 237 tomorrow? Yeah, I doubt it, but it could. Now, next week, tomorrow, right, when tomorrow's close, right, about 3:30, 3:45, we'll be looking at this and figure out what we're going to do. I'm going to let it expire worthless because that's what's going to happen. It's going to expire, be worth nothing. But then I'll be having all those stocks for next week. What do I do with them next week? All right, so let's say hypothetically, it's going to be 229 next week. So what do the 229s look like? Well, the 230s are going for 287. Too close. I'd lose money. Don't want to do that one. The 235s, 110. The 235s are up here. I like the 235s for next week. Okay, what can I get for those? 235s, $1.10. That's below what I paid for it, but 3 strikes higher than the current price. Could it hit it next week? Maybe. But if we take a look at how much movement does a stock usually have on an uptrend? Okay, because downtrends are different. Uptrends, okay, you look at the open, the between the high and the low, and you do your math. Okay, you subtract the low from the high, divide it by the open, they'll give you the percentage of movement for the day. And you do that enough times. Okay, let's say you do it 30 times. What is the average 30-day movement? Okay, you take the low, okay, subtract it from the high, divide it by the opening of the day. That will give you the average movement for the day. And then you take that average movement, you do it 30 times. You take it all together, you add it all up, divide it by 30. That's your 30-day moving average. Okay, how much does it move up on average for a 30-day period? Okay, 3 strikes out of the money. Is that enough? Okay, or should I go 4 strikes out of the money? I will sell something because I want some kind of cash flow. Okay, do I want 3 strikes out of the money, collect $1, or do I want 4 strikes out of the money and collect 51 cents? I won't know until Friday comes along. Until Monday comes along, because I want to see what happens on Friday. It might go up, it might go down, it might channel. Okay, I don't know. I can't. The great John F. Kennedy once said, "We cannot answer the questions of tomorrow with the knowledge we possess today." So I can't tell you what I'm going to do tomorrow until tomorrow gets here. All right, we're down to 81 people. Holy cow. All right, that being said, I missed that question. I'm missing all these. Oh, how do you look at it on terms of handle? Like 5 handle. I have no idea what you're meaning by handle. Really, I don't. And I pause for that. Okay, once you own the stock company, do you keep selling against calls against the shares? Yes, I do. Okay, that gives you weekly cash flow. What's popping? Gee, Niles, my goodness, you like to show up late, dude, don't you? Yes, we did CVS. Buddy Wally, if one of your stock drops lower than next one, okay, yeah, we won't be able to figure that until Monday. Because as I just showed you, Lowe's is lower than what I paid for it. Get that? Lowe's is lower. Anyway, Lowe's is lower than what I paid for it, but I did collect a premium every single week, and I did collect a dividend. Okay, at some point in time, I'll add it all together, and I will sell it at a profit at some point in time. Gallant, you're welcome. War stocks, yep. No one can read that. I have no idea what you're talking about. Did you give a strong recommend? I don't recommend anything blank, sorry. All right, can you take a look at PFIE? We took a look at PFIE. I don't think they pay dividends, and that was a no. PFIE. Yeah, okay, sorry about that. PFIE doesn't have dividends, so it's basically a waste of time to take a look at it, in my humble opinion. Okay, so I have a certain strategy. I don't do stocks that don't pay dividends, so it would be wasting our time to take a look at that. Does this guy pay taxes? Ooh, good question. Thank you for showing this, as it has been very confusing. Oh, I feel bad. If you think this is confusing, this was created for a 9-year-old. Okay, remember my 9-year-old daughter? Here we go. All right, I'm gonna bring her up. Hold on a second. Here we go.
As you being part of my internet website club thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of.
Yeah, it was created for her. She wasn't a math student, not the sharpest knife in the drawer. My daughter loved her to death, but it was created for a 9-year-old little girl. It had to be simple, safe, predictable, consistent, and no way she could lose. Why? Why do you think those 5 criteria were so important? Rule number 1, okay, never buy something you do not want to hold long term. That is pretty self-evident. If you don't understand the stock, you don't understand the company, you don't understand any of the fundamentals or anything at all, don't buy it. That's rule number 1. Never buy something you don't want to hold long term. Number 2, never sell at a loss. Okay, that's pretty easy right there. Number 3, 20 years of increased dividends. Why? If the stock goes down, which it will, let's go back here for a second. Okay, stocks go up, stocks go down, stocks go up, stocks go down, stocks go up, stocks go down, stocks go up, stocks go down. That's all they do. They go up, they go down. So, never sell at a loss. 20 years of increased dividends. Why? If the stock goes down, I want to be reassured that I'm going to get an increased dividend every single year, and that dividend increases every year. Okay? Rule number 4, weekly options. Not monthly options, but it has to have weekly options. Okay, why? I want weekly cash flow. There's 52 weeks in a year. That means I'm collecting 52 checks a year. And I like that to be 1% or more. And if it is 1% or more, that's over a 50% return per year. Safe, simple, predictable, consistent, no way to lose. Okay? Never buy something you don't want to hold long term. Never sell at a loss. 20 years or more of increased dividends, weekly options, and then the numbers got to work. What do I mean by the numbers? The charts. The charts got to work, and then these numbers. Okay, I could buy Lowe's at 229, so I'm looking at the 230. The 230 I can sell, and I can collect 287. That's more than 1%. Okay, if I buy it tomorrow morning and I sell that strike price, okay, which is basically the exact same price I'm paying for it. I'm paying $229.58. Okay, I'm basically selling for the same price I paid for it. Selling somebody the right, not the obligation, to buy it from me at a certain price by a certain date. Okay, so if I buy it tomorrow, sell the option. They can do whatever they want between tomorrow and Friday's expiration. Friday's expiration, 10 May 24. That's next Friday, 4 p.m. It's 1%. So the numbers got to work. And the numbers do work on this. All right, that being said, Look at that. We're at 11 o'clock. We got a half hour left to go. Now, Taiwan Bomb. Does this guy pay taxes? Why doesn't he ever include capital gains taxes in his calculations? Well, just to let you 142 people know, I'm in communications with a retired IRS tax agent. She would like to come on and answer questions about taxes. Taxes are something you really need to talk to with a tax planner or tax strategist. Okay? I can tell you I pay no taxes, but there's a reason why. Okay, all the rich people don't pay taxes, and the reason why we don't pay taxes. The tax code is hundreds and hundreds and hundreds of pages of telling you how you don't have to pay taxes. You just got to figure it out. Okay? Get a good tax planner, get a good tax strategist. Okay, now I do pay taxes, but I don't pay income taxes because I have my account set up in a way where I don't have to. Okay, now I do pay my federal taxes, not my federal income taxes, because that's not federal and it has nothing to do with the federal government whatsoever. That goes to pay the interest on the Federal Reserve, which has nothing to do with the federal government either. That's a separately held company that's domiciled in Puerto Rico. Okay, I'm not going to get into it. Okay, but tax strategist. Oh, the lady I was talking about, the ex-IRS agent, she teaches people how to limit or reduce your taxes to zero legally. Okay, she wants to come on and chat with you guys, and I'm all for it. However, I told her let me know what day works for her best, and then I will throw out some videos, drum up some business so a lot of people here to answer questions about taxes, specifically on trading accounts. Okay, so yeah, I do pay my taxes. I just don't pay certain ones. Dividend stocks with 20 year. All right, thanks. 86. Tommy talks crypto. I with to buy now, please. I have 10,000 now. I have to invest now. Thank you. All right, Tommy. My suggestion: DM me number. I'll give you a buzz. We'll chat. If you're looking to make a lot of money overnight, this ain't it. Julie, nice to see you tonight. Julie, see, she's new here. Not that new, but she's been around for a while. Seeker 3R. Well, Seeker. Hi, James. Do you have guides on your Patreon? I have never traded stocks or options. All right, Seeker, my suggestion to you would be, and also to all you new people, just keep coming back. Keep coming back every night. Absorb the information. See if it makes sense. Okay, look at this right here behind me. Do you know who Lowe's is? Have you heard of that company? Do you know they have been in business for over 100 years? Do you also know that they have increased their dividends? Now, the dividend is, if you buy the stock, is your portion of the profits. Okay, so there's two different companies. Companies that share profits and companies that don't share profits. I don't look at companies that don't share profits. Why? Because I want weekly cash flow consistently. That's what I want. This trading strategy was created to get weekly cash flow, safe, predictable, consistent, 1% per week. That's what this was created for. It was created for my 9-year-old daughter back in 2008. It worked so well, I just said, the hell with everything else, I'm just going to do this. Well, I do this and a few others, but this is the only thing I share here. ATR, never heard of ATR. Please help how buy stocks. Oh, well, my suggestion would be I buy stocks, so much of stocks I lost already. Please guide me on what kind of stocks I need to buy. Okay, so Mr. Electrical Service dude, send me a DM, send me a message, we'll chat. Okay, but come back every night. Come back every night and just learn. Ask questions. It's really not that difficult. Okay, now let's keep on going through these questions. By confusing meant placing an order at the software. Oh, Dorino. All right, well, it's really not that difficult. Now, I don't know if you use Thinkorswim, but I use Thinkorswim because I like it. I also use Robinhood on my phone. Simple. Okay. I lost so much money. Oh my God. I'm sorry about that. But ask yourself a question before you decide to take the leap. If you really wanted to follow me and you really want to walk you through it, okay, right here, okay, that 10-minute trader right here, this link here goes to my Patreon where I actually walk you through, hold your hand, you can watch all my trades and I answer all your questions to make sure that you're doing it right. Okay, oh, what the hell? I got a hair on my face. Ugh. At least I still have hair. My dad said I lose my hair in my 40s. I'm in my 60s and I still have my hair. Anyway, yeah, so you come down here. This is the one right here, $100 a month. Okay, I walk you through. You can ask me any questions every morning, Monday, Tuesday, Wednesday, Thursday. Okay, from 9 a.m. to until we're done answering questions. Okay, if you have questions, I stay on the phone with you and answer the question. We actually do it through Zoom calls. You actually, TJX, ooh, Gallant, you sneaky little bastard, you. I'll put TJ up next. But yeah, $100 a month, walk you through it. Don't ever do something you don't understand. Don't ever buy a stock you don't want to hold long term because you just might have to. Okay? Make sure it makes sense to you. All right. If you're expecting price to go up, could you sell it without an option? Yeah, you could. But I'm going to see if I can have an example that I can show you, a really good one. This one might be a good one. Hold on a second. I'm going to do a bit of calculations in my head and see how good this option trade is. Just off the 19. All right, we'll do the 19. All right, so now, you guys, if you've been following me for a while, you know that I like Macy's. I do. Now, I'm going to show you, DeRhino, why I could care less if the stock goes up or not. I just want my 1%. Okay, now, this might make sense, right? So I want you to follow along, grab a piece of paper and a pencil, because I'm going to give you a little bit of math to go over. Here's a few things. Are you ready? Now, I love Macy's. They consistently give me 1% every single week. So I have no intention to get rid of them if they continue to give me 1% every week. All right. Now, first thing I want to look at is what can I buy it at tomorrow morning? 1928. Okay. The 19s are going for 61 cents. The 1950s are going for 32 cents. The 20s are going for 24 cents. All three of those are paying over 1%. Okay, now here's where I could care less if the stock moves or not, and I just collected my 1%. Now, let's say hypothetically, see, I like the chart. Look at the chart. Here's your high up here, here's your bottom there, and look at this. She jumped up. Here's your bottom. Look, she jumped up. It's in 1912. All right. Now, if I buy it at 1928 and I sell somebody the right to buy it from me at 19, I can collect 61 cents, correct? Okay, so let's take the calculator and do some math. Clear that. My profit is going to be 61 cents per share. 61, okay? But if I buy it at 1928, and I sell it for 19, I'm losing 28 cents, correct? So I'm going to take that 28 cents and I'm going to subtract it from my profit of 61. So I'm going to subtract the 28 cents. And what does that leave me? That leaves me 33 cents. I know it doesn't sound like a lot, but let me continue with the example. Now my profit is 33 cents. What is it costing me for the trade? Well, it's costing me $19.28. But I've already subtracted the 28 cents. So now I'm just going to divide it by the 19. Okay, so divide it by $19. And that gives me a grand total of 1.7%. That's almost 1 3/4% for 1 week. Now, here's the thing. The stock at this moment in time is currently at 1928, right? If I sell the 19s, if the stock goes up, I make my 1 3/4. If the stock doesn't move at all, it stays exactly where it is, I make my 1 3/4. The stock can even come down a little bit, okay? As long as she ends up at the end of the week at 4 o'clock on Friday, 10th of May. See right here, the 10th of May, Friday. As long as she's at $19 or higher, I still make my 1%. So the stock can go up, stock can go down, and the stock can stay the exact same, and I will still make my 1 3/4%, regardless of what the stock does, as long as she stays above 19. So I'm not really relying on the stock to go up or down. It's just going to stay where it is. Can it? Yeah, it can. Will it? Don't know. But I like Macy's. She's been in business for over 100 years, consistently increasing its dividend every single year for more than 5 decades. No problem whatsoever holding it. And every week, it's consistently giving me over 1%. So I get no problems whatsoever. All right. That being said, what other questions we got? The Can Man. All right. Conservative. It's illegal to not pay taxes. It's illegal not to file taxes. Cool. Thank you for letting me know. At 60 years of age, I didn't know that. I will sleep better tonight. Thank you for informing me. You Renaissance, why are you not on Instagram? Because I haven't figured that one out yet. Wait a minute. Oh, why am I not on Instagram tonight? Yeah, the wife took the phone. she went out with her friend from elementary school. Hey, J.D. Crosby, you're back again. You've been here for quite a while. Blade, nice to see you back again. Oh, I missed some of these. WU. Western Union. It's a monthly. That's a no. All righty, Gallant, I told you I'd take a look at TJX. TJX. 95. Just scraping by that 1%, dude. Did you see that? 95.07. The 95s are going for 99. Just scraping by that 1%, dude. Way to go. All right, let's see what the numbers look like. Okay, the high of the year, the low of the year. Where was it a year ago? Where is it now? Okay, that's what I'm looking at. Now, a year ago, we were at 77.97, bottomed out at the end of May at 75.53, finished out the year at 93.54. The last 30 days, last 90 days. Last 90 days, we opened up at 94.96. Okay, here's the high, here's the low, there's where it was 90 days ago, here's where it is. What does it look like it's doing? Basically, it looks like going sideways. Okay, channeling. They call that channeling, not sideways, channeling. All right. The high was the end of February, and that was 102.84. The bottom was the 19th of April, 3 weeks ago, and that was 92.35. So the last 30 days, it's a little odd to check out that one. Look at high, low. Where was it? Where is it? Where's the movement? Here's your 30-day high. It's coming down, bumped up a little bit, came down a little bit more. Okay, bumped up a little bit, came down a little bit more. Here's your 30-day bottom. Okay, what is that, the 19th, the 20th? The 19th. Okay, the 30-day high was 101.16. 30-day bottom was 419. Okay, and that was 92.35. From the 30-day bottom, she went up to a point where we, the buyers and sellers, say, all right, enough's enough. Started taking profit taking. Back down here, yesterday was a low, but not a 30-day low. Okay, She bounced up today. Now, I'd like to see 2 days of the upside. There's only one. And that's an interesting question, Roscoe. Would I prefer the EXD at the beginning or the end of the week? I prefer it at the end of the week. It gives me an opportunity to do a triple play. Those ones are cool. Do you have any group, anything you update day to day? Well, Mr. Electrical Service Dude, yes we do. Come over here. Okay, right up over here, the top left corner of your screen. You see my little picture right there? Click on that, and that will bring you to a link that says the10minutetrader.com. Okay, the10minutetrader.com. Okay, it gives you a video basically telling you the exact same things we do here. Yeah, another video explains the no risk explanation. Here, this link right here, that is my daily trading. All right, from there you'll get all my social media, YouTube, Twitter, Facebook, Instagram, podcast, LinkedIn, Patreon, TikTok, and all the books I've written right there. Underneath that, you have all the accounts, the 2 accounts that I share. But if you want to do live trading with me, right there. Okay, I actually walk you through it. Let's get back to where we were. All right. So here's the thing with TJX. 30-day high, 30-day bottom. I like getting 30-day bottom after a 2-day update right here. So jump in here. Okay, you already got your 1%. Okay, look at the movement. You already got your 1% there. You pulled back. Now we have 1 day to the upside. I would look for one more day to the upside, but I would put that together with when do they have their dividends. Okay, that being said, next question. Is it being sold with the option? Barry, I'm not 100% sure what you mean by is it being sold with the option. I buy the stock, okay? In this example, I think he's talking about Macy's. Let me go back to Macy's. Oh, wait a second. Let's finish up with this one. Okay, so here, let's do the seasonality first. What does it normally do this time of year? Ooh, I like that. Check that out. Channels for a little bit and then moves to the upside by the end of the year. Not bad. But TJX, how often do they pay dividends? TJX. Nice, 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 nice. 2000. I might make an exception for them. That's almost 20 years. It's 24 years. Wait a minute, 24 years, TJX. Is TJX even on my list? Okay, so TJX. All right, so here's a little bit of math for TJX. 9507. The 95 is going for 99 cents. If I take the 7 cents off there, then I'm only getting 92 cents, which is a smidge below 1%. So here's the question you need to ask yourself. Do I really like TJX? It's not giving me 1%, but it's getting me close. Okay, it is really close to 1%. Okay, and you saw the dividends where it increased consistently. Okay, look, it consistently increasing the dividends every year, higher and higher dividends. That's what we're looking for. Okay, TJX. So that's the question you need to ask. Do I like it? Do I want to hold on to it? Okay, Barry, you ask, is it being sold with the option? I'm not quite sure what you mean exactly, but the way it works, if I say it slower, I buy the stock at the current price, 95.07. Okay, I'm buying the stock. Now, what a covered call is you're selling somebody the right, not the obligation, to buy it from you at a certain price by a certain date. And the date that we're looking at, 10 May 24. That's next Friday, not tomorrow, next Friday. So as long as the stock stays above 95 by next Friday, we'll be back into cash the following Monday, and we could do it again with a different company. If it's below 95, let's say it's 94, 98, okay, I will still have collected that 1%, but the following Monday, I will be able to sell another covered call against it and collect another premium until the stock gets called away. All right. American Free. Cool. Why did I miss all that? I missed all these questions. I love your content. All right. Is Thinkorswim good for daily trading stock? You know, there are other companies out there that don't have commissions. Thinkorswim does have commissions. So if you're doing daily trading, you know, I'd find someplace that doesn't charge commissions. But that's me. Okay, American Free. You've had Altria for 25 years. Has it ever come over and washed your car for you? Oh, maybe it came over one day and mowed your lawn while you weren't looking. No, stocks go up, stocks go down. That's all they do. Okay? Now, Altria, you're getting higher dividends every year. That's all you're getting. Why aren't you selling covered calls against them? Sell 5 strikes out of the money. You get the dividend and you get the premium. You get the premium on a weekly basis. It doesn't have to be huge. I mean, you have it for 25 years. That's 25 years worth of weekly options you could be selling against it. That's a lot of money you walked away from. But sometimes options expire without paying. Not true. Okay? As soon as you sell an option, there's a huge difference between buying an option and selling an option. This is where you have to get the terminology correct. Oh, we're below 100. Below 100, it's 11:30. Time to quit. So, I don't like going below 100 viewers here. So, we're going to call it quits. We'll do this again tomorrow. Needless to say, safe, predictable, consistent 1% per week. Simple, safe, predictable, consistent, and no way to lose. Never buy something you don't want to hold long term. Never sell at a loss. 20 years or more of increased dividends. Weekly options, and make sure the numbers work. All that being said, you guys have a great day. We'll see you again tomorrow. Oops, cancel that. I want to cancel this. Stop streaming.